Hey everyone! In this video, we'll dive into how we ended up in a world where tweets, rumors, and hype drive market movements, and what you can do to protect your nerves and your money. Let me first share my view on how we got here. Western economies, especially the USA, still spend, act, and price themselves as if they control the majority of the world's economy. But that's no longer true. 20 or 30 years ago, almost all key products, technologies, and innovations were coming from the West. Fast forward to today, with the rise of Asia and parts of the Middle East, that reality has shifted. Now, Asian companies compete head-to-head in every sector. Yet, US companies are still priced as if there's no competition, and that they can continue to grow forever. Take the price-to-earnings ratio for key US indexes like the S&P 500 and NASDAQ. In a normal market, a PE is around 15 is healthy, meaning if you invest, you expect about a 10% return through dividends. A PE for USA indexes is 30, which means they do not earn enough to be priced like this. You might argue, but these companies are growing fast and their profit will soon be much higher. Sure, they are growing, but can they double again and again, especially with rising global competition? I seriously doubt it. Historically, US tech giants grew fast, and a PE of 20 plus was fine because you knew they'd double profits in several years. Today, things have changed. For example, Huawei developed Harmony OS installed on 1 billion devices, competing with iOS and Android. Yes, the USA launched ChatGPT, but China quickly answered with DeepSeek, Tesla versus BYD, YouTube versus TikTok. The competition is fierce everywhere. Given all mentioned and the rising debt burden on US citizens and the government, which can lead to cutting spending, betting on massive growth for American tech companies looks unrealistic. So why are people still ready to pay for USA companies more? There's a massive demand for US stocks from both retail investors, institutions, and pension funds. It's understandable. Everyone talks about the legendary 10% US market growth. People trust in names like Apple, Tesla, etc., and that they will grow forever. Even Warren Buffett promotes index investing. Yet his company, Berkshire Hathaway, is sitting on $300 billion in cash, not pouring it into US indexes. Interesting why. This all keeps demand for US stocks high, which is driving share prices, yet companies do not earn enough to justify this hype. And all of this made the US stock market extremely sensitive to tweets, rumors, and social media drama. A good example is recent tariff wars. European indexes where PE is around 15, 20, volatility was significantly lower. With the current president in the office, we're looking at 4 more years of pure roller coaster volatility. And with a falling dollar to yen and euro and worsening political relations, investments in USA companies by foreigners most likely will drop soon. I'm not predicting a market crash or the end of the USA's dominance. America still leads in innovation and global influence for now. But with such sensitivity to rumors and tweets and so much uncertainty, you can no longer estimate market movements. Thus, you cannot assess the risk, and thus it's hard to invest wisely. Therefore, I choose to invest in smaller, less speculative, and simpler assets where the risks are much clearer and manageable. For me, the best investment to survive the Trump era are investments in local businesses via crowdfunding, where returns are fixed and company risk is much easier to estimate. Medium-scale renewable energy projects with a fixed income and substantial impact. Buying shares in rental properties. And sometimes I invest in startups, where risk is high but potential returns can skyrocket. These assets, they aren't traded publicly, so no overvaluation and wild swings based on a tweet. Usually these projects offer fixed or predictable returns. Allow diversification with low minimum investments as low as €100 or less if you want to learn how to invest in early stage startups, green energy projects, and real estate. Subscribe to our YouTube channel and visit crowdinform.com. See you in the next video.